Welcome back, guys. We're going to do our monthly, till now, trade recap, uh, sort of trade review more than recap. This month, as per August, I started my trading plan on the 10th of August, 9th of August, and till now I took 6 trades. Not many, and there are not many wins because out of 6 trades, I have 0 wins. But it's fine. Don't worry about me. It's all managed, pre-planned. Yes, yes, it's fine. So we're going to start with our first and one and only Bitcoin trade, Bitcoin USD. This was done on the 17th of August, and we were expecting. We're going through it. This is of course a screenshot. So this was a pre-planned price sensitivity area. This 45,800. So this was chart up since the morning. It's not like we chart up to see a double bottom. We were expecting a bearish trend and a reaction at this level. So after smaller bearish candles, as you can see here, smaller, weaker, smaller, weak. We have a nice engulfing bullish. And you say, okay, this is the first reaction. This is what we want. We don't want, unless we are going to move into sells, we want some reaction. But okay, we see 2 nice engulfing candles, but you already see that they are weak, and small bearish and bullish candle altogether. So that's what we wanted. We want a reaction, but we don't. You never. It's not always like this here that you get bearish, bullish. Price doesn't work like that. Price most of the time works like if this is a price sensitivity area or a key level or whatever you want to call it. You can call it resistance, support, or whatever you want. You almost always have either slightly below, then up, then slightly below, then up. Then you see a retest of this price sensitivity area, and then continuation up. Usually gets a retest of these previous highs, and then continuation up, maybe impulsively. We can identify exhaustion of the sellers. We can identify that buyers are still not here. Why? They have to grab liquidity. It's not like okay, at this key level there are already hundreds and hundreds of orders ready with buys. No, so it's an order flow. It's not a order set order. Okay, here buy thousands of contracts. You have to grab some liquidity, some order flow, and then continuation up. Sometimes you see if it is a very impulsive action on the downside, this is a very strong resistance or support. You see sometimes a spike up of maybe 20, 30, 40 pips, but this usually gets corrected, maybe creating a double bottom. And then you can see either price making a new lower low and then continuation down, or then you see price, okay, tack, tack, tack. Or usually is what I'm trying to see also. This one, you see, first reaction, dipping a little bit below, but then correction, break, retest, and then continuation up. Retest of these previous highs, and then continuation up. So these are the sort of reaction that I try to see and I look for in every pair that is gold, Bitcoin, etc. So we see impulsive, we see a reaction, but we start to see that price is not clearly, buyers are not in control, sellers are not in control, because after a big impulsive bullish candle, we already have a correction and a weaker bullish candle. As you can see, there's no clear direction. And this is exactly what we want to see if we want to see a double bottom. Very impulsive, not a clear direction, price going down. Yes, bears in control, but as you can see, smaller, 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 weaker. This is the weak bearish candle, fails to close below the key level or price sensitivity area, and we see a very impulsive bullish candle closing above these bodies. This is where I entered at the end and the close of this candle, but price didn't actually want to go up. I had a 10 pips stop loss, of course, and after this engulfing bearish candle, I could have gotten up, but it's not my plan. My plan is either to get stopped out or nothing. That's why, since it's already a small stop loss, imagine if I get out here and you see this reaction perfect on the dot, and then this engulfing bullish. You can see in here, maybe price went here, tuck, tuck, to take profit, and I was still in my trade. And I'm still not experienced enough to, okay, I get out of break even here. I'm able 2 minutes ago, 2 minutes later, to re-enter immediately. I'm not that experienced. I'm not experienced at all. But this is, okay, double bottom being created. Entering when the first impulsive clean engulfing bullish candle closed above. This is the first step of the price sensitivity area. The first time it reaches there. So it's something that I think I have to consider, that I don't have to be the first and don't have to expect huge reactions straight away. Because as you can see, the trade idea was valid. It was just like 20 pips below, 10 pips below, from here, from the my price sensitivity here. But we saw huge, many times, many rejections over there. It's just that my timing was not perfect. It was too fast. Just expecting a reaction way too fast. Especially with a 10 pip stop loss, 2 pip spread, you are giving very, very few chances to price to react in a realistic way. Always try to be realistic in the markets. Don't expect your move to happen just because you want it. Okay, you see here, you see reaction, you see it's very difficult to enter here because this is not a price sensitivity area that I was marking up. Here you see this is a reaction. You see, okay, this is sort of a mirror move. Nothing doesn't matter anything, doesn't change anything. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. Small, weak. Not closing below. This is not what I would like to see if I'm in a buyer bias. So you see a bullish failing to break above, immediately corrected. You see a bearish closing below, not even below, actually, and then a small bullish. I think nothing is telling you that price will continue up. That's why the better entry for me would have been here after clear confirms. So you're seeing all this, you see these reactions, multiple rejections with decreased momentum. You enter above again, above your price sensitivity area, when price cleans break above. And then you can get a much cleaner action. Okay, this was trade 1. Let's go on the trade number 2, which was already shared with you. I entered at 1747, break and retest. I was spotting a double bottom, but I didn't execute here because I was a bitch. Nice momentum, nice retest. of these previous highs, or the block being created, break above the key level, we break above the this price sensitivity area, we have a retest, and then I see bullish candles closing above this previous bearish candle. I enter buys, enter like 10 pips above the key level. This was one of the main mistakes, and then price got immediately rejected. Let's see the advices, because I asked Jiv, enter too close to New York open. It was half an hour before. Entry should have been here, and is what I was analyzing. Why? Because you are identifying a bullish trend, a rejection, another bar being created, and failing to break below this key level. If you are in a buyer bias, why waiting this confirm 80 pips later? You are already seeing this is a double bottom you are expecting. Why not entering? This was not FOMO, because it was analyzed, pre-planned, and it was shared. The retest of the move, but I didn't. I had to enter here because this option gives you much more range to play with, and since it's much more unlikely, much less likely that price will break below. Why? Because we are coming from a rejection. 1, 2, 3, 4, 5 rejections. And we enter here when the last rejection was a few minutes ago. The last time the price was above was a few minutes ago. 1739 was the day before. So it's much more confirms here. Just put a price stop loss below 1738, 37.5, and you have much more range, because you can even, okay, you see this, maybe price reacts here and it tells you, okay, no, we are still in a bearish trend. Might happen. No, you see this reaction, you see this high. Yeah, I want to respect it. You see, it actually reacted here. But you have time and you're already in profits to say, okay, price is retracing and looks like it is going to make a new lower low because it created a new lower high. Well, okay, I get out at 20 pips of profits. I will not get 80 pips, fine. But you see, entering here gives you so much range, so much freedom to say, okay, I will manage it. Because now it's not like I enter here and I see an engulfing. Oh, okay, oh gosh, we're already at my stop loss. Oh, we're 10 pips above. Then you see this bearish candle and you see, okay, it's coming toward my entry, it's coming toward my hands. No, it's much better, a much better entry here, higher risk, higher reward, but it's also high risk because it's very, very early. But the reward is so high because you can either have clean price action or you can have medium price action and then manage the trade. Think about it. You have 3 scenarios. Let me put it this way. Okay. So, as you can, if you remember, price, then have a reaction or the block being created, break below, retest, 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 failing to break below. Let's put it a nice color. Okay. Last time it went below this level was yesterday. So let me do it this way. Okay. So we are seeing many reaction, but now if you enter here, you see, of course, it's not like price is strongly bearish and I'm entering on the bearish impulsive. I see strong reaction here. I see this, okay, or much more cleaner. I think it was even cleaner. You was like, I mean, yeah, exactly. It was okay. It was exactly that one. You see this action, then you see this, and say, okay, do I enter or not? Yeah, if you think about it, you have three scenarios that might happen to you. These scenarios, if you enter if you enter here, okay, first one, you enter, you have clean price action, reaction here, and then you go. First one is best case. And then you have the second one, which will be purple. I will call it okay, because it is indeed okay. Because maybe you are enter here, you see you have reaction, you see that price is breaking below. You exit, you can exit here in a profit, 10, 15, 20 pips of profit, and you are okay. Worst case scenario, and I will put it in red. Worst case scenario, you are entering here, remember, you have 10 pips move, then this bearish trend is being respected. And then you see price moving down. So it's your choice to enter, to stay in the trade, to take your loss, because maybe you say, okay, my stop loss is below here, so I will exit only if my stop loss gets hit, because my trade at the end is invalid, because maybe we get this and then up. It's your choice. You can either exit a break even or accept a loss. It's your choice. But at least in this case, you have three scenarios. You understand it, right? Okay. So let me just make sure that I got this print. Okay, that's very good. Very good. Very nice. And then we're going to see what happens if Okay, here. What happens if we enter here? So we remove this one. Ta, ta, ta. Okay. So we are entering. You see, we see price moving. Reaction. Breakout. And you see a retest of these highs. And you see this one. Okay, now you enter. What are the three scenarios? So you have breakout, retest maybe, or even impulsively, continuation up. This is the best case scenario. Our entry is here. You can have, you enter here, you retest 10, 15, 7, 8 pips, and then price retrace and closes below your entry. Why? Why would that be? Because why not? We are still in a bearish trend, aren't we? This is just a lower high. Nothing special, nothing that should say, oh, this is unexpected. No, why not? We are creating, maybe we are reacting. So why should we be surprised? So you're now already in a, okay, but now what do I do? I just got up 8 pips and I don't know if I have to exit break even or I have to wait for price to break below my stop loss for my idea to be invalid. I don't know, but it's okay. I don't know, but it's in 2, 3, 4 minutes. One big bullish or bearish candle can already stop you out. But in this case, what is really relevant, and you don't have the okay scenario because you don't have this, the move and the small retracement that you, okay, yeah, already up 10 pips, 20 pips, I can manage the trade. No, because this is already 1 minute candles. You don't have enough range to play within and to be comfortable. So that's why here we don't have the okay scenario. And this is why and this is why if you think about it, makes sense what Jivan is telling us. Enter here. It's the same. I mean, you just gain something because it's not like you are having more risk than here. The 10 pips here has the same value of 10 pips here. The point is you are giving yourself much more. You're giving a third choice. That's it. More than that, I think is unnecessary. You're giving yourself a third choice. What do you want more than that? And it's actually very, 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 very interesting to think about it. You don't have the medium. So let me just put it here. There you go. And I can show you. Here. It's very, very intuitive. If you enter here, you have 3 scenarios. Best case, okay. You can exit here, and worst case. If you enter already above, you don't have that much because the range is closer. There's not the same. It's not the same. That's why you should enter. It's better enter at the high risk reward zone, let's say. And of course, I got distracted. I was doing the I was just doing the trade recap. Let's see if I still have. Okay, this one I think is okay. We already analyzed. Are we still recording? Yes, 26 minutes. I'm really sorry, but we don't have many trades. So we're going to see CPI trading. This is the most bullshit that I could have done. Trading the news, trading wars without understanding. I understood that it was good. I expected this liquidity grab. I waited, and when price broke below the key level, I got in. I could have got 20 pips of profits, but since it was that fast, I was outside of my trading hours. I was from my laptop. I wasn't using a mouse. I was not at my session. I didn't have the position, open position, was the object in the broker open. I couldn't even do anything that fast. That was a mistake after mistake. This is all coming from a no controlled environment. No controlled environment. Non-trading session hours without understanding the news. So this is why this is the you know there are news, you think you know everything, but then you got fucked. At least I have the stop loss. I always have a stop loss. This was 12 pips, nothing much. Of course, it's not a lot, but it was an impulsive and was not a pre-planned trade because it was also in a non-trading session hours. Number 5. Okay, number 4, sorry. This was happened this week, 17th, if I'm not mistaken. We were expecting a reaction at 17.99. We waited for the rejection. Here you see weak, very weak candles. Never closing below the level. At this first sign of after the 4-hour candle, after the bad retail sales, New York volume, at the first clean bullish I entered, it was like 10 pips. I could have gotten out at 10 pips, break even, but it's for the plan. I prefer to maybe, as I told you, we get a retest. Now here we have some more volume, and then we spike up. So it's better for me, it's better to take my full stop loss, and that's it. But what was the problem? That these are not the price action candles you want to see. Look how many weeks in the last few minutes, not even few minutes, in the last half an hour, were made. This is not clean. But as you can see, New York Stock Exchange open, much cleaner. Look at these candles, how clean they are. And this is where you want to enter in the trend. So that's why the better entry would have been at the break and retest of this key level after New York Stock Exchange made its move. This is what I was telling you about the sort of double bottom, you can say, double bottom here, triple bottom, dipping below, breaking, retesting, and then continuation up. This is for a scalper. So you see from here, you have your target profit getting hit, and then you can either exit at break even or take a partial and close the position over there. Let's move fast. Number 5, prices coming from pre-London clear bullish trend, pre-planned analysis, of course. We see a reaction, we see a pullback, not breaking below these previous highs on the left, so which is good. At the breakout, we can either enter at the breakout, but since we are so close to London Open, what I preferred was to wait patiently for a retest, watching London Open do its thing, pullback and hourly candle lower wick. Watch the 1 minute gap in liquidity and entry when it flipped bearish. This 1 minute I watched live, went bearish, and then when it flipped above, I entered. As you can see, my entry was here. And the only problem is that after this flipping, price immediately retraced. I exited here for 8 pips of loss, while my stop loss, hard stop loss was here. And as you can see, I would have been still in the trade and got out at either 1-to-1 after this action, or either, okay, it's 10 pips. I don't want to take partials because whatever, but I see that price is retracing. I put it at break even and it's not a loss. But this loss, 8 pips loss, brought me to the next trade. And this is what triggered me. My next trade, number 6. Where are you, number 6? Why did you abandon me, number 6? Okay, there you go. The very next trade. Oh, there you go. Emotional entry, because my bitch voice was telling me, yeah, you see, your pre-plan analysis was to enter a rejection of 1781. You see, you have 3-4 candles closing below this for sure. This engulfing bearish, then enter. You will go to your target profit. This was just emotional, because the reality was I was losing 8 pips. I was telling that it was everything pre-planned. But where are the confirms? If you think about it, where are the confirms? Since when 3 small 1 minute candle are confirmed to enter cells just like this? When we have this price sensitivity area on the left that just proved yourself how strong it was, enter here if you want. If you see clean price action, not here. There's not enough confirms. Don't you see the previous lows on the left? This is a price sensitivity area. Why enter in here? Why enter in here as a stupid motherfucker? And that's when you have to be harsh with yourself, because nobody else will be that harsh. They will just maybe hate. They will just be happy if you fail. You have to be harsh on yourself and say, okay, why are you so stupid? At least I get 10 pips stop loss. I'm not that dumb that I say, okay, no, I trade with no stop loss, so we go there. But the expected value was 0 pips from one trade. Because expected value, if I follow the plan, and if I'm smart, I entered here, I see the reaction, and I enter exit break even here. That's it. One trade, 0 pips. The real value is I lost 10, 18 pips by not following the plan. And not following the plan, I get emotional. 8 pips getting out here, while my trade idea was still valid. This was exiting out here is the same idea of entering Let me just clean it for you. Okay. I mean, think about it. Entering, exiting here is like entering here. Why? Because you are saying, okay, now price will go down, will go bearish. I have the confirms that price will go bearish. Therefore, my trade idea of being bullish with this as a stop loss is invalid. But is it? Where are the confirms that are telling you that here your trade idea is invalid? There are none. Because you have this price sensitivity here on the left, respected here. So why? It's the same. It's like saying, okay, here, in my opinion, I would enter sells. And this is why my buy idea is invalid. No, absolutely not. Absolutely not. So that's why I either will take my 12 pips stop loss getting hit, or my trade idea is still valid. And maybe it doesn't go to take profit, but at least gives me that range that I was talking about to say, okay, 10 pips in profit. This is the perfect example of the okay range that I was talking to you about. This one. You enter here. You have this range. You can either go up, but you see, okay, I have this range in profits. When I see reaction, I can either decide, okay, you know what, I'm getting out. 5 pips profit, I don't care, I pay my commissions. Or I say, no. For me, maybe price can retrace and retest these highs and bounce up. I will just put my stop loss at break even. I don't want to lose 10 pips, 12 pips. Maybe I put it down below here. The most recent higher low. And that's it. That's why you have more range when you have this type of entry. Okay, so see you guys. I hope it was helpful. I improvised a lot this in this trade review session. I'm gonna be honest. I hope that this is very helpful for you too, as it was for me. Because it might be very, very important to understand why high risk, high reward entries are not high risk because you lose more, but it's just because you are entering with high balls. You're entering here, but you are, at the end of the day, you have much more range to play with, and it's so helpful. Okay, see you guys later on.